Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Hello and welcome to ETMarkets Crypto Q&A. I'm Maloni Bhatt. Today we have with us Jayadevan, the Senior Director of Communications and Content at CoinSwitch Kuber, to answer all your questions. Now, if you have any questions, do write into us at ETMarkets Crypto Corner.
Hi, my name is Jayadevan. I'm a Senior Director of Communications at CoinSwitch. I have been a crypto enthusiast and have been tracking the crypto space actively for the last few years. And I'm here to talk to you today about Ethereum 2.0, the merge and triple halving. And we're going to explain what's in store for investors as well as what's in store for this big event that's going to happen in the world of Ethereum. What is Ethereum? Ethereum is a blockchain platform with its own cryptocurrency called Ether or Ethereum. Ethereum stands out among other cryptocurrencies as it is intended to be much more than simply just a medium of exchange or a store of value like Bitcoin. Like all cryptocurrencies, Ethereum works on a blockchain network. What is the main difference between Ethereum and Bitcoin? If you look closely, Bitcoin functions as a digital currency and enables peer-to-peer transactions that involve no intermediaries. It was the first major innovation using blockchain technology. It was designed as an alternative to the highly centralized fiat currencies, which are subject to value erosion over a period of time because of inflation. Speaking of Ethereum, its blockchain is far more versatile than Bitcoin and has multiple use cases. Ethereum blockchain technology supports the peer-to-peer payment network. You can create smart contracts on Ethereum. It allows developers to create and run decentralized applications. The Ethereum blockchain powers several decentralized ecosystems like decentralized finance, wrapped tokens, stablecoins, and NFTs. How has Ethereum impacted crypto market? The launch of Ethereum in the crypto market is like transitioning from Web 1.0 to Web 2.0 of the blockchain. In the Web 1.0 world, information was displayed on static websites and updated every once in a while, whereas 2.0 is a dynamic system where there is two-way communication. For example, the evolution of Web 2.0 enabled the creation of social networking platforms such as Facebook and Twitter and all of them. Ethereum helped the crypto market expand by enabling the use of blockchain into other real-world problems. It is almost like a internet computer which can be programmed with smart contracts. What is Ethereum 2.0? Ethereum 2.0, also known as Serenity or Ethereum 2.0, is an upgrade to Ethereum's existing blockchain. Its primary objective is to increase capacity, reduce transaction costs, and make networks sustainable. To that end, Ethereum will migrate from what's called proof of work to a proof of stake consensus mechanism. What's wrong with Ethereum 1.0? Ethereum is currently operating on proof of work consensus mechanism to make transactions possible. This mechanism is energy intensive. It consumes a lot of energy. And right now it can only handle about 30 transactions per second, which means long wait times and high gas fee. It can even cost up to $200 per transaction when at its peak. And compared to, there are newer networks like Solana, which help you do transactions much faster. For example, Solana supports 65,000 transactions per second, and it nearly has zero transaction costs. So it puts Ethereum at a disadvantage as a blockchain technology. What are the phases of Ethereum 2.0 upgrade? So there are 4 or 5 phases to this upgrade. The first one is, it's called phase 0. It's called the beacon chain upgrade. Second one is staking. Third is phase 1.5 called docking. Phase 2 is merge and support for transactions. Phase 2.5 is improved Ethereum virtual machine support. And this can happen after Ethereum 2.0 comes into existence. What is a beacon chain upgrade? The beacon chain is a complex technical change made to improve the existing Ethereum mainnet. There's no need to get turned off by all of this extremely complex technicalities, because we'll quickly explain it in simple terms. So let's start with a fun example. So imagine heading over to a supermarket to grab a 5-star chocolate bar. So on reaching the store, you find a new variant of the bar. Let's call it 5-star Ultimate on the shelves. And the Ultimate version promises more protein, different kind of nougat, and slightly lower price, right? Well, the older 5-star is akin to the Ethereum mainnet, which currently is operational, whereas the new one is the Ethereum 2.0. Just to really dumb it down, right? The beacon chain is one of the upgrades that will make the newer version a lot more, faster and energy efficient. How does scaling happen in Ethereum 2.0? So moving to proof of stake helps address many of the capacity issues that are plaguing the Ethereum 1.0 ecosystem. The Ethereum blockchain currently has limited data storage capacity at any given time, and it costs a lot of delays and higher costs. In newer proof of stake blockchains, including Ethereum 2.0, you can scale through a method called sharding. Sharding helps distribute data across multiple machines on the proof of stake network, and it addresses the issue of scalability. When will Ethereum 2.0 happen? Ethereum was launched in 2015, and the shift to a sustainable proof of stake model was first ideated in 2017. The actual upgrade started in 2020, and it will continue until sometime in 2022. The upgrade process is scheduled in 3 phases, which we already talked about. In fact, there are some intermediate stages, which we also talked about. And phase 0 is ready to go live sometime very soon now. Triple halving of Ethereum, what is that? On August 5th, 2021, an Ethereum upgrade called EIP 1559, or the London hard fork, was implemented. The hard fork was part of a larger Ethereum 2.0 transition and mainly aimed at improving Ethereum's transaction speeds. To cut a long story short, the upgrade involves reducing Ethereum supply in circulation through a process called burning, and it deflates Ethereum, which is the native cryptocurrency of the Ethereum network. Simply put, you create scarcity, and the prices of Ethereum should technically go up. The process is similar to Bitcoin halving, which happens every 4 years. Since the effect is similar to 3 Bitcoin halvings, it's called triple halving in the case of Ethereum. Is the EIP 1559 upgrade truly helpful in reducing transaction costs and network congestion without moving to the POS consensus mechanism? Before EIP 1559 was implemented, miners used to determine how they would validate transactions, and users needed to figure out how much transaction fee they would pay. And that was an inefficient process. After EIP 1559 is implemented, the transaction fee are now determined algorithmically by the protocol. For miners, it establishes the standard operating procedure of how network congestion should be managed, and that was earlier not possible. To reduce network congestion, EIP 1559 does it by reducing the network usage rate by almost 50%, which means each confirmed block will be 50% full only under normal circumstances. If there is a buildup of transactions, miners can add additional transactions to the block, going past a 50% block usage threshold to reduce congestion. In such cases, when the block usage rate goes above 50%, the base gas fee will increase automatically and vice versa. How Beacon Chain upgrade and EIP 1559 will help Ethereum to increase its value. So to start with, Beacon Chain will introduce the POS consensus mechanism, which means ETH will not have to reward miners so aggressively, which would then help the ecosystem cut down the token creation rate from over 4%, bringing it down to about 0.4%. So with about 0.4% inflation clubbed with the Ethereum burning protocol, the 1559, which we talked about earlier, it will make it closer to a fixed supply token, and is supposed to impact price action positively. And this is supposed to be good for investors. Full disclaimer, this is not an advice for you as an investor. What does this mean for investors? The demand for ETH could drastically increase in the coming days as Ethereum slashes nearly 99% of its energy consumption post the merge. This, along with inbuilt deflationary pressure, could make prices drastically shoot up. From an industry perspective, ETH 2.0 will cement Ethereum's position as a leader in DeFi, in technologies like Web3, and may not leave a lot of room for rival protocols that are trying to catch up. And a successful merge followed by sharding is quite necessary for Ethereum's future. What do you think of the future of Ethereum ecosystem? Ethereum has completely revolutionized the crypto market. It could not be wrong to say that it has the potential to become the most valuable crypto ecosystem, maybe even surpassing Bitcoin, because of all the use cases that Ethereum enables. With the explosive growth in NFTs, increasing level of awareness about decentralized finance, which is called DeFi, and Web 3.0, Ethereum could be the direct beneficiary of all these new apps that are being built on it. If you look at some of the numbers, there are about 3,000. If you look at the numbers, there are about 3,000 distributed applications running on Ethereum mainnet. It is about 80% of all the dApps in the market, and its total value has currently crossed $600 billion in market capitalization.
That's it from all of us. Hope this was informative. Do write in with your thoughts, and we'll see you soon.
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.